Hi there, welcome to this week's midweek market analysis. Right, so let's jump straight into the chart and walk you through some of the outlook over here. Now, to get things started, we have the dollar index. If you take a look at this chart right now, one of the primary forecasts and expectation over here is that the dollar is probably going to consolidate going forward. And one of the pattern that I'm seeing here is a possibility of a triangle that looks something like that, which means short term perhaps a little bit more upside, coming back down before the eventual bigger move back to the upside. So when the dollar index is kind of a neutral, then for most of those major pairs that we're going to look out for, you want to take note that the dollar is neutral, and therefore what's probably going to move those currencies are likely going to be more of the counterparty, right? So what I mean is that if you're looking at euro dollar, and if the dollar is neutral, then probably what's going to move it is the euro instead of the dollar here. Okay, so this is what I'm looking at for the week for dollar index, maintaining a rather neutral perspective. Now, in terms of euro dollar right now, we are kind of in a key zone that I'm personally looking out for. The market is kind of testing at 9945. Which is the top of the channel as well as the 100% FIB. So today, if we can get a decent rejection back down, then this would give us a very nice three-wave corrective structure, and we can expect more downside. One of the key confirmation level here is around 9845. So if we can get the market to break back below 9845, we have a decent sell bias. Okay. And suppose that if the market decides to just continue to go higher and it breaks that parity level, which is around 1.0000, we'll probably need to reassess the whole situation and the structure over here, because then that might mean that euro dollar is developing into another pattern. Okay, so do keep in mind that tomorrow we have the ECB coming in as well, so that might create some kind of volatility, which if you are a little bit more of a conservative side, then just wait for a breakout below 9845 for a potential trade. Okay, and don't be too aggressive in jumping into a trade at this point in time. So that's on the euro. Now, in terms of pound dollar, we have the market tagging the previous high around 1.1490. So that kind of gives us a little bit of a mini double top as of now. Looking at the whole structure here, there is this possibility this can still come back down and retest the bottom before the bigger move up to complete the 1, 2, 3 expectation, right? So over here, unless the market break off impulsively above 1.1490, we're gonna still continue holding on to a, I would say, double top potential and look for a short-term move back towards 1.1255. Okay, so keep an eye on that. Okay, for pound dollar. In terms of Aussie, okay, it came back up a little bit more, but overall the structure still looks intact. For now, we still have that channel. We have that FIB area around here at 6400 to 6440. So what I would suggest is go down to the 1 hour time frame. Okay, and give it a bit of time and see if this develops more into what we call a crawl pattern. If it does, then you have a nice little breakout entry point at the bottom. Okay, if you're very aggressive, obviously you can start to already consider this little breakout here with this as a potential 1 hour double top. Okay, but this is a bit aggressive. If you're more conservative, my suggestion is to just give it a little bit more time, maybe going into London. If you can see this here, then your breakout would be a bit more conservative in a way, right? You wait for more sign of confirmation. Alright, so Aussie dollar is presenting a pretty decent one that you might get involved in a trade today, okay, depending on how the market develops. Then we have the dollar CAD, right? So dollar CAD over here, nothing much in particular. Since the start of this week, we have been expecting more downside, while the market is still developing in a very corrective nature. We are expecting it to eventually still touch the 3500 level. Okay, but very choppy, very slow, not one of the best setup, but the direction is rather clear. The bias is due to the downside, right? So of course, if let's say you have some strategy, your own technique to execute trade, then you want to definitely be focusing on the downside. Okay, next up over here on the dollar yen, my suggestion is to just be neutral on this, give it more time to develop. Okay, on a Friday last week, we had a very massive drop, about 500 plus pip, but the market kind of retraces back quite strongly as well. And then right now we're basically hovering just around, that range. So if you look at 1 hour, again, it's not giving us a very clear structure. We have a lot of choppy move within it. And usually when I'm faced with such a pattern, my suggestion is to just stay out of it, give it time. Eventually it will develop into something that is clearer for us to be involved in. Okay, so for dollar yen, we just stay out of it. Now back on to the gold commodities over here. Gold seems to be presenting a rather neat opportunity. Okay, so we kind of had a little double bottom here, very nice little rejection, a very nice little flag that is developing at this moment. Now if I go down to the 1 hour chart, there are two key ways to look out for it right now. One is that we can conclude, okay, maybe this 1, 2, 3 is done, is completed, and we are ready to take off from here. That's one possibility, and for that reason, I'm having a potential breakout area around 1662. Is actually in view that if this is done and we are ready to take off, you want to be involved in the buy when market breaks off 1662 in an impulsive manner. However, if let's say we are also taking a look where, okay, this 1, 2, 3 maybe not really completed in terms of the correction, and this is just another reset, and we can come back down to retest the bottom around 1638 before the next bigger move up. That's definitely very possible as well, because this can then turn into 1, 2, 3. Okay, and in that event, then we'll probably look for another entry around the bottom. And the beauty about a potential breakout trade is if this were to just come back down, then our entry will not be tagged. There's nothing to be concerned of, and we'll just then update our better entry moving forward as price develop. Okay, so this is on gold. I think let's see how the market develop over here. Okay, but that's the perspective that I have. Going back to the 4 hour time frame, this is a primary first target around 1683. However, I wouldn't suggest you to take full profit there, perhaps partial, and to let the remaining trade run perhaps to higher prices, right? Because the upside on gold is very huge. Okay. Then next up we have crude oil. Now crude oil over here is a little bit of a mix, but I'm still holding a bit of a bullish bias here. However, having said that, again, you can see the consolidation that's happening. So there's a possibility this can still come back down, retest the 8210 before that bounce, which give you that double bottom formation. Or alternatively, this can be a 1, 2, and then this just go, right? So if you're looking at crude oil, you can also consider a breakout around 8665. However, also have that in mind where this just comes down, nothing of a concern, and then look for another entry perhaps nearer around 8210. Okay, so that's on crude oil, with an immediate target around 9380. Okay, same thing here for crude oil. I think there's a lot of upside potential, so don't take full profit if let's say this trade plays out very nicely. Just take partial around 9380 and then leave at least some part of the trade running for extended targets. Last one here to cover in this video here is the S&P 500, okay, which is the US equities. Right now I'm seeing a little bit of a potential, what we can call it as a leading diagonal, right? So from this bottom around 3490, we kind of get a very impulsive push, and from there we develop a very clear 5-wave structure. Okay, and it's going up in a rather slow manner. So most of the time when it's the first push to the upside that looks something like that, we can start to anticipate that this is a leading diagonal. And if that's a leading diagonal, we can't expect at least some kind of deeper retracement first, potentially towards the 50 and 618 FIB. And right now, if you're more of a counter trend trader, you can look for this short-term retracement trade, right? So one area to look for confirmation as a break is 3780. Okay, and if let's say you're looking for the break, then your stop loss would naturally be placed at the recent high. Okay, and your target at the bottom, so give you about like risk reward 1:1 point something. However, if you're conservative, then my suggestion is just to be patient, wait for this to pull back in a very corrective manner, and then you look for a buy at the bottom. Okay, so that's on a S&P, right? So overall, I think there are some decent opportunities that we are definitely worth looking at, right? And then some of these pairs, naturally, you just want to give it more time to develop for more confirmation before committing to any trade. So all the best to your trading, and I'll see you guys in the next one.